We turn now to Michael Moran, chief economist at Daiwa Securities, a former Fed economist and one of Bloomberg's best. That means that we bring you only the best people on the economy. We have crunched the numbers to find the most accurate forecasters in the world. And Mike joins us now from the New York Stock Exchange. Good to have you on Bloomberg. Thanks for coming on today.
Thank you. Good to be here.
As you heard us reporting, and no doubt you are aware, Mr. Bernanke telling lawmakers today that the economy continues to require the support of accommodative monetary policies. Specifically, what did he mean?
Well, he meant that right now interest rates are going to stay right where they are, close to zero in the very short end of the maturity spectrum and still very low at the long end of the maturity spectrum as well. If you look at what's going on in the economy right now, we are expanding, but it's not expanding at a rapid rate. It's not expanding at a rate that's going to bring down the unemployment rate quickly. So in this type of economic environment, I think Bernanke is willing to keep policy right where it is.
And yet, Mike, he suggested that the Fed is not interested in getting back into the mortgage business at the moment, despite the housing numbers we've seen over the past week. Do you think he's whistling past the graveyard at this point?
You know, you've seen comments like this from many Fed officials. There is some concern about distorting the mortgage market, providing too much support, keeping mortgage rates lower than the market would put them in the ordinary course of events, and thereby misallocating resources. If you look at where mortgage rates stand relative to other interest rates, they are low by historical standards. So there is a little bit of market distortion going on by the Fed's purchase program. So I think they would like to stay out of that market if they could. Now, you're absolutely correct that the housing numbers have not been impressive lately, but still I think in the long run the Fed would be serving the economy poorly if it did continue to distort the market and push too many resources and too much credit into the mortgage market. There are still problems there, but you've got to let the market work those out.
And Michael, what was your impression of the Federal Reserve Chairman's comments on unemployment? I thought it sounded pretty optimistic. What about you?
I didn't hear exactly what he is saying, but if you look at what most Fed officials are saying, they see a very slow decline in the unemployment rate. In fact, by the end of the year, they're expecting it just to be in the maybe low to mid 9% range, which is still, by historical standards, an extremely high unemployment rate.